Okay guys, it's Monday the 6th of August. I have just been triggered into a short position. So what I'm going to do, as always, is I'm going to sort of talk you through the reasoning behind the trade, the analysis that led me to taking the short position. And then what I'll also do is I'll talk you through the trade as it develops, go through anything that I'm looking at, any decisions that I am making, and try my best to sort of explain my thinking behind each step that I take. So I'm short on the FTSE at £45 per point. We are on the 5-minute time frame as always. Now, coming into the market this morning, looking at the sort of daily chart and going over the analysis, the real main areas I was watching were this 7730 zone up here and this 7700 zone right here. For me, these were really good levels of potential resistance. Now, the market sold off pre-market down into the 7671 level. And the way I was looking at this zone was, first of all, it was relatively good support. And if we started to break down below this zone, I would be happy to look for potential short positions. However, one of the main concerns for me was this sort of 7650 level down here. Let's mark that up. I was basically looking at it as a potential support area. And the market came down, it drifted down, and it found support at 7650, and then once again it pressed higher. Now, as it started to press higher, what I was looking at was how the market has, first of all, it's broken down. It's broken underneath this level after testing at one of the sort of key resistance areas that I have been watching. So there was no trade from the key resistance level because it was too early. We've then broken down, so given a slightly bearish sign, but I wanted to be careful of this sort of 7650 area. Now, as the market started to press back up, what I was looking at was potentially making this lower low, lower high movement on the trade or on the FTSE for today. We then started to reject. There was absolutely no setups for me to get into the market. But really, as we were rejecting here, I was still sort of a little bit hesitant. We rejected, we pressed back up. What did we do again? We started to reject once again. Now, as we rejected once again, we're testing the MA200. So that's another little added confluence. I'm looking at, okay, we've now broken down below. We are starting to pull away from that 7650 area, which I wasn't too keen to trade straight into. We've then rejected, which is a third confluence. We've then pressed back up again. We've rejected for a fourth time, and it's on the MA200. So I'm sort of adding everything up in my head, and I'm trying to justify this trade. I'm now looking at rejections off of the MA200, off of a level, let me just cancel that, off of a level where I was happy to look for short positions. Okay, so let's try and draw this in. It's because I'm drawing around about the stop level and the entry level. Okay, so 1 and 2, like this. So now we've rejected twice, and it's potentially setting up into a double top, which is a slightly bearish signal. Now, with the signal candle, it came down, and it's testing at the center point of this double top. If the market starts to break below the double top, I'm looking at it as giving another bearish signal. So my entry below this candle is, you can actually see it on the chart right here, it's just below that center point. So I was happy that if I got triggered into this trade, it would be breaking the double top and I would see some sort of bearish reaction. Now, what I'm looking for is I'd like to see a minimum of 8 points, but I'm going to watch and see how this starts to react at this 7650 level. As I've mentioned, it is a level of support. As I came into the market this morning, it was sort of an area where I wouldn't say concerned about, but I didn't want to trade straight into 7650 because, as we can see, it has already found a support level. Now, what's also worth going over actually, I don't think many people or many traders talk about this. When I came into the market today, I had this rejection level up here, yeah, good level, rejection level up here, good level, but in between, I was a little bit more neutral. I didn't have a view on the market. I would say maybe 50%, 60% of the time when I come to the market, I don't have a sort of overriding analysis or overriding view of the market. And that's very, very common. You can't, especially if you're day trading, you can't come into the market Monday, Tuesday, Wednesday, Thursday, Friday and have seen one candle change on the daily time frame and then suddenly be like, oh, okay, now I'm looking at this, it's going to do this, it's going to do this. when you don't have that very clear, significant view of the market, you just, or I personally, what I do is I just be a little bit more cautious and I start to look to sort of add up the confluences for the trade. When I'm trading, I'm always looking for confluences. I won't just take a trade because there's a pin bar at a resistance level or there's a pin bar at a support level. I need to see either fairly confident analysis on the daily time frame. So I'm expecting this to be, let's say we tested this zone up above. I had the analysis that that was a key resistance level. I would have been a little bit more lax in my entries up there because it's what I was expecting, what I was looking for. But when we started getting to 7671, I'm not just going to take a trade unless the market starts to give me clear signals that, you know, okay, this is starting to set up now as a high probability trade, or it's high probability enough for me to risk money. If I get into this trade, it's fitting with my trading plan, and I'm not happy to take the loss, but it would be considered a normal trading loss. I would put it down to, okay, it was a good entry, it lined up with a lot of different confluences, and I was happy with that trade. After I've sort of stormed around the house and thought about throwing my computer out of the window, that is. But, so for this one, we are now testing 7650. I am looking for it to break down a little bit more, around about 8 points at the minimum, as I've mentioned. The problem is we're sitting at 5 points, we're sitting on this support level. I don't really know how the market is going to react here because I'm a little bit more neutral. Now, there is also the potential that we'll press back up to retest this sort of center area of the double top before we find further resistance. That's a very common movement when you have double tops and double bottoms. You have the double top, the market breaks down, it presses back up, it tests, and then it rejects once again. Now, because it does that, I'm less keen to just get my stop to break even because I know that test happens over and over and over again. And what that means is you have to take on extra risk. You know, you can't just protect your trade as soon as it starts to break down into a potential support and resistance level. And that's why I'm looking for those confluences, I guess, because I know that if this trade now starts moving against me, I really have to be willing to sort of let it bounce around a little bit. And my stop's relatively tight. I always use a relatively tight stop. So that's where the sort of risk comes back into the trade. Okay, so let's see how we get on with this one. It's Monday, where are we at? 5 to 10 in the morning. It is actually a bank holiday in Scotland, but it's not a UK bank holiday. So my girlfriend is off work for the day, so she might end up popping into the office. If she does, I will try my best to get her on the camera, but she has already said that there's absolutely no way that is happening. But we'll see. We'll see if she comes down. Okay, so 5 points. Not really a lot to do at this point. This is another thing also. If you find that you struggle to manage trades, a really simple thing to do is set your stop, set your limit order, get out from the computer, and go do something else. Yeah, if you have a definite target, profit target, you have a definite stop level, you're happy to get in the trade, but when you get in the trade, you start turning into sort of like this jittering mess, and you know, oh, the market's maybe going to move against me, I don't really know what to do. I used to be like that. I'll happily admit I used to be like that. I used to be absolutely terrible as soon as I opened a trade. One of the ways I sort of combated that was by getting up from the computer, walking away, and then what happens is I would sort of sit in the other room, be in the living room or something, and the whole time I'd be sort of sitting thinking about the trade, but I couldn't go in and alter the trade because that was, you know, that was the sort of rules that I had developed to stop me from making these mistakes, because otherwise I would do crazy things when I was learning to trade. You know, right now, let's say where this market found a little bit of support here and it started to press a little bit up on this candle, I would have came out of this trade and gone long, and because I would have panicked that it was going to start to move against me. And then we would start to maybe do this and come down, and I'd start to panic again, and I would exit this losing trade and I'd enter into a short, and then I would just get chopped and chopped and chopped, and the profit that I'd made from the first entry, I would give it all back again. Absolutely crazy things. One of the things you have to realize when you are learning to trade is it's a lot to do with psychology. I try and stress that to everyone who comes to trading, and usually I get ignored because everyone, they come to trading, they don't want to hear about the psychology, they want me to show them the technical things, because I think really they're looking for the sort of secret indicator or something that's going to help. I was the exact same. I didn't want to listen to the psychology side of things. If you want to be a pro, you're going to have to start working on your psychology. It's what separates everyone. You know, anyone can go out, save up, buy a course. Anyone can go out, watch every YouTube video on trading. There's a huge failure rate. If there's that access to all of that information, why are these people not being successful? There's a lot of good information out there. There's a lot of information that should make you a profitable trader, but why is it not happening? I'm just watching this trade, we're at 8 points. I'm going to see if we can sort of break down towards 10, 11, because we have had a nice move down without too much rejection, without the retest of the double top. So I'm wondering if there's a potential now for the 7641 zone to be tested. Yeah, but if there's all this information out there, but so many people are failing, even people who take these courses that are, you know, 5, 10 grand, who are, in my opinion, absolutely mental. If they're still failing in such a high percentage, what's the difference? What is separating those people from you? Why are you going to be able to read this information and become a profitable trader? And it's because of psychology, 100%. If I could just make psychology videos for the YouTube channel, and I knew that that would bring in traders to watch those videos, that's all I would do. But I have to sort of do lots of different videos and then sort of throw in the psychology video and hope that people watch it and hope that it sort of benefits people. If you want to be a successful trader, learn your trading plan, learn exactly what you're doing, and then get your ass onto psychology, because that is exactly what you need to learn. It's what is going to turn you into a profitable trader. Okay, so we're now down at 10 points. Let's watch and see how we start to react. Down here, we may just pop back up. Okay, so I'm getting ready to close out. Okay, so we're holding at 10 points. We're at £450, 472. I'm going to close that out. It's basically 1% on the trade, £472. Very nice, simple trade. It's all about sort of reading the market, letting the market tell you what it wants to do. And then, you know, you get in, you play the probabilities. It's either successful or it's a failure trade. Last week, I had a tough Monday, Tuesday. I had a losing trade Monday. I had a losing trade Tuesday. I really thought I was going to go into the end of the week having a loss, or at best break even. But then the analysis that I was looking for the Monday, the Tuesday, it started to come in the middle of the week, and I was able to get the account back to break even and into a little bit, not a lot, of profit. And then Friday was non-farm payroll and I took it off. It's all part of trading, guys. It's all about really using your psychology to make sure you're getting to the best trades, make sure you're managing those trades in the best way, and then just letting the profits build up over time. Okay, so looking at that, I could have held it for the full 1%, but I'm happy with the trade. As always, guys, I hope that was helpful. I hope you're all having a good trading week. Hopefully my rants about psychology there are encouraging you to start looking into the psychology side of things. I'm James Orr, and thank you.